Yesterday, the euro tried to return to 1 week's highs but came back under pressure in the area of 1.0722, 1.0725. As a result, the currency went down, hitting a new 1-week low. Likewise, the British pound failed to rise above the 1.2300 mark and reversed gains, sliding to a fresh 1-week low. Their weakness was driven by Fed Chair Jerome Powell's comments on monetary policy. The head of the Fed addressed the outlook for U.S. monetary policy, saying the central bank would not hesitate to resume raising interest rates if necessary. He acknowledged that inflation pressures might accelerate in the months ahead. Against this background, the greenback gained value, dragging their risky assets down. And now let's take a look at today's macroeconomic calendar. It contains a batch of important reports from the UK, including GDP growth and industrial production data. Britain's economy is estimated to have shrunk by 0.1% in the 3 months to September, while the annual comparison is foreseen at 0.5%. This indicates tepid economic growth amid rising interest rates. In case of gloomy statistics, the British currency will most likely extend losses, returning to the previous month's low. In addition, traders may take notice of speeches by ECB President Christine Lagarde and Fed members. As for statistics from the US, the University of Michigan is set to release its preliminary readings of consumer sentiment, inflationary expectations, and current economic conditions, which may cause a spike in market volatility. If the indicators are below analysts' forecasts, the euro and the British pound will have a chance of bearing some losses. In the event of better than expected data, the market will face a steeper sell-off. From a technical point of view, if the price breaks through the 1.0663 mark and fixes below it, a strong sell signal will be generated. Thus, the euro will plunge to 1.0642 and probably 1.0616, where I recommend going long on a rebound to catch an intraday correction of 20-25 pips. Alternatively, a slide to a new 1-week low followed by a return to 1.0663 will create a buy signal, thus pushing the euro up to 1.0692 and 1.0722. In this case, the euro-dollar pair will get stuck in a sideways range. Short positions can be opened amid a false breakout at 1.0692, the middle line of the sideways range, or on a rebound at 1.0722 and 1.0753, counting on a decline of 25-30 pips. Speaking of the British pound, the situation is similar. If GDP data growth comes in stronger than expected, sterling will most likely climb to 1.2252 or even 1.2293. At the level of 1.2293, it will be possible to go long on a rebound to catch an intraday correction of 30-35 pips. Going long at 1.2252 will be relevant only amid a false breakout. In case of disappointing data, the British currency is expected to break below 1.2215 and extend its slide to the levels of 1.2187 and 1.2157. As an alternative, if sterling hits a new lows weighed down by grim GDP numbers, but then turns positive, coming back to 1.2215, it would be a wise decision to go long in the hope of a bullish correction at the end of the week. Long positions on a rebound can be considered at 1.2157 or 1.2127 with a view to catching an intraday correction of 20-30 pips. Good luck and have a nice weekend.